Thank you very much for being here. Just to introduce ourselves, my name is Junaid. I manage Elixir Securities. Ruhail Saab, as all of you know, he needs no introduction, is the CFO for Engro Corp. Ruhail Saab, thank you so much for being here. I would also quickly like to point out some of our key team members. Asfar Naeem is our head of research, and Bilal Athar, who all of you know, is the director equities at Elixir. The format of today's presentation is going to be very simple. Ruhail Saab is going to give about a 15-minute presentation, after which we will have a Q&A session which will be quite fluid. Obviously, Engro is a fantastic company. It has been a leader in our corporate sector. It has been an innovator. And like all businesses, it is also having its own fair share of small little hiccups. And I think Ruhail Saab will be able to guide us in terms of how the management is planning on coping up with these tough times. So without further ado, I'd hand it over to you. Once again, thank you for being here.
Thank you. Thank you for taking out the time to come here. I was approached by Junaid for this corporate briefing, and I was actually a bit struggling as to how to go about this, because while we have updated you for the third quarter, we are right at the year end, but based on regulations, obviously we can't give any forecast. But what we've tried to do is to, I think, tackle the key issues which are coming up again and again about leverage and gas and stuff like that. I think we've tried to do that and try to illustrate some numbers. And because it's, as Junaid said, I just have 4 or 5 slides to give you some key numbers, and then try to answer questions as you may have on any particular issue as such. So if we start with, to give you a snapshot of what's happened in 2011, very quickly on each business. Basically, as far as the fertilizer, which is our main business, is concerned, we achieved commercial operations in the middle of the year. And those were primarily related to gas issues, and we will obviously discuss that in detail, because we had achieved trial production end of 2010, and we were just waiting for gas to do test runs and do that. I think what is sort of not appreciated by the investor community is that despite being such a huge technological challenge, we hardly faced any technical issues at the plant, which you have heard about other fertilizer plants getting delayed, the COD getting delayed. So we were not delayed for any technical issues. There were construction delays initially, but in terms of actually running the plant, there were hardly any delays, and that because of the gas issues, that achievement sort of gets clouded as such. So practically, there are some minor teething issues, but nothing major would have actually delayed the project per se. So what we did on as far as gas issues were concerned, and we obviously, as I said, this will be the main topic of discussion, is that we did a number of price increases starting from early the year, 1st January, and the cumulative price increases we have done on gas curtailment alone, excluding gas price increases, which we were passing on anyway, was about 550 rupees a bag. And this was done basically to weight average. So we estimate how much production loss we will be facing on our new plant, which is NWEN. There is already a curtailment which was going on from the previous year on the old plant, which is very low as compared to the new plant. And we weight average and see, and based on what our feasibility, cash flow targets, EBITDA targets were, and we used to raise prices accordingly. The only difference was that we were doing, in order to be, how should I say, politically correct with the government, we were doing it post facto, means that once the curtailment had happened, we were doing a price action, and therefore there will be a small hit in 2011 simply because that production is lost till we took the price increase. But starting, say, 1st January 2012, you're back to square one because price increases have already taken place. In addition, we pursued the court action. We got an interim order sometime May or June, and then we got a very strong final order sometime in mid-October, which was in line with what we were saying. The sanctity of the contract must be maintained. We have to, irrespective of whether We've also, by the way, proven to the government that it makes economic sense to supply to fertilizer. But leaving that point aside, I think the importance of the contract cannot be, unstated. And we have other instances like circular debt. But anyway, so going back, we got a very strong judgment of maintaining the contract. In addition, we got a couple of very strong points from the Sindh High Court on a couple of constitutional amendments, and I'll just briefly mention them. One is in Article 158, which says that the gas produced in a particular province must be given to a user of that province first. So since we were assigned gas from Kadarpur and Dharki is also located in Sindh, so we have that first right. The other is, if I remember, it's 172, which in fact the judge volunteered himself, is that post the 18th Amendment, 50% of the allocation rights of that gas also with the provincial government, who, by the way, has backed us fully as far as this allocation is concerned. So we have a stay order. We're now actually proceeding with contempt application right now in the Sindh High Court, because while we did get gas for a period in the whole of November, but by 9th or 10th of December we were cut off again. So we have moved a contempt application there, and the government has filed in the Supreme Court. So we continue the legal battle as we go along. As far as the other small business, the Khair is concerned, mashallah is doing well, profitability is on track. And overall, as we reported in September, the profitability is actually better than last year. Moving on to the other businesses, in terms of purchase product, mashallah is doing very well, earning as expected. As I said, I'm limited by not giving exact numbers, which we will announce in our annual, but it's on track. Rice business, we had some initial losses already planned. There were some teething issues at the plant which we are sorting out. So those are initial issues which we will sort out as we go along. Foods, mashallah, we've maintained an excellent performance. In fact, those numbers we had actually shared with most of you when we were doing the IPO in July as part of the IM 5-year or 3-year outlook. And the profitability is, mashallah, on track along with those numbers as such. We completed the listing at a premium of 15 rupees a share, so it's at 25 rupees. And we've just completed about middle of the year a small acquisition in Canada on halal food, which we hope to exploit and use it as a distribution channel in future, especially for products from Pakistan as well. As far as polymers is concerned, as all of you, it's a listed company, I'm sure a lot of you must be following it. We had plant issues till in the first 3 quarters. Mashallah, if not 100%, a lot of the issues are behind us. The 4th quarter, we just took in the numbers today. While the actual capacity is higher, but on the nameplate or the 150,000 ton capacity number which we use internally, we actually operated at something like 99% in the 4th quarter. The not so good news was that because commodity prices were coming down, the margins got squeezed in the 4th quarter, which was suppressing profitability, but they are going back to normals, because in petrochemicals, when prices rise, your margins expand because of a lag effect. And on the way down, they have a small period when they are squeezed simply because the finished good prices come down faster initially than raw material prices, but they eventually catch up as such. Power gen, mashallah, again a very solid story because we are gas-based, very high on merit dispatch order. In fact, our dispatch order for the last 6 months has been like 99% plus based on available factor. Very good efficiency numbers, etc. So all in all, very good performance. Receivables from time to time has been an issue, but because we are gas-based, so our absolute number isn't that much, and it's again it had piled up now, and the government is again doing, for a lot of you must be knowing, again a debt swap. So we will get cleared. The banks will be left with government paper, and then we go back to the cycle again. Wopac again, mashallah, everything inshallah was under control. So all in all, I think so. To go back, I think the issues which are sort of affecting are really the gas Polymer, although from our market cap, from our profitability, is a small number, but just to, I think, assure you that the main issue of plant is, I wouldn't say 100%, but significantly behind us, and it should be upwards, inshallah, going forward. Okay. Now, if I look at, I'm trying to answer a key question here about cash flows and debt servicing. So, what has happened in 2011, and which is mainly related to fertilizer. So, after COD, if I just account for that, so the base business operated for the full year, the NWEN operated for half a year. If I just take those numbers, our EBITDA for 2011 for fertilizer only was about 16 billion, and debt servicing, which we did this year, was 13 billion, of which about 8.5 billion was principal retirement. So, as Engro Fertilizer, the gross debt retirement was about 8.4 billion for 2011. In overall, I think, as I said, I just talked about it, except fertilizer, some setbacks in fertilizer and polymer, we were, mashallah, on track and in fact exceeded expectation number of businesses. All debt obligations were met. Profitability year-to-date September is actually better than last year. Now, I think what is happening is, as you all know, I think there's an undue focus on this gas issue, and I'll try to illustrate through some numbers going forward. And that has led to, I think, an underperformance of our stock price. And we have, as I said, taken some mitigation measures, which I've mentioned, in terms of pricing and legal, but I think that the market expectation is maybe a bit different, or they see the situation in a much different way as we do as such. So if you, what I've tried to do here is, without trying to, as I said, being limited to what I can disclose, what I try to do is simulate a situation for you. What I said is, I'll just take the current urea price today, what has already been achieved today, and I will just take the urea production of what 2011 was, actual production. This is actually 1270 estimated, it's actually slightly higher, maybe 1275 or something. I will just have 2-3 days more to go. But if I just take that 2012 will be exactly as 2011 in terms of gas availability, and this was approximately 5 months of gas. So effectively a capacity utilization of something like 35-38% on the new plant, and about 91-92% on the old plant. Just taking those numbers, current price already achieved, and we get an EBITDA of 22 billion rupees for 2012 versus a debt servicing obligation of 18 billion, of which 10 billion is, by the way, principal retirement. So you can calculate that as we go along, that 10 billion for 2013 will translate to maybe 1.5 to 1.8 billion lower interest expense in 2013. So this 18 billion is total debt servicing, which includes 10 billion of principal as well. So just using exact 2011 production, current prices without any improvement whatsoever, if I just throw in our model, and that includes, by the way, the inflation on our fixed cost structure, etc. This is all thrown in here. So this is what we get as such. Now, we have the option of raising prices further, as we have clearly demonstrated in 2011 as such. And that, why? Because as you see, even with, by the way, urea prices have come down. As usual, government of Pakistan has some bad luck because they imported urea at like $550. Today it's $425. But anyway, that's, even if I take, in fact, we've taken 400. The 425 is an expected price. Even if I take $400, the landed price of urea in say Multan, which is let's say the center of the country, is 2,300 rupees a bag. We are selling at 1580 a bag. So there's a significant gap as such. And so there is, so let's say if we get 1 or 2 months less of gas, you have the opportunity of increasing prices and trying to cover up that gap of our target. In addition, we are now actively working with the government on alternate gas supplies. It's a bit too early because there are so many scenarios as such, but I think the more important thing is that the numbers that simulated is as if we are getting on SNGPL, because that's what has happened in 2011, say approximately 5 months of gas. If you get 1 month, say less, then obviously you can increase prices to offset that. But what I'm saying is that we are trying to work an alternate where the actual gas supply situation can even be better than what has happened in 2011. So that's a further, let's say, backup plan which we are working on. Okay, this, I mean, we try to do this and look at the price in a different way as such, and this is at least something which I look at. If I take 98 rupees a share price today, right, and we look at our 393 million shares outstanding, that gives a market cap of 39 billion. Then we say that, okay, we have two listed subsidiaries already, right? So those are market prices which are determined freely by the market. And if I just take our share of our percentage holding of polymer and foods which are already there in the market, that's about another 18.5 billion rupees, which are market-based prices. So that leaves a net market cap of about 20 billion. And if I just take 2010 numbers, inshallah we'll improve upon that. As I said, I'm limited by what I can disclose, but inshallah we'll improve on that. But I just take 2010 numbers and exclude polymer and foods again. The stock is trading at a 2.9 multiple with earnings growth in all sectors. So I'm in front of you, so it's obviously difficult to explain the market price, but so that's all I had. I think, as I said, I'm limited by the outlook, but just wanted to give you a few numbers to just touch upon the key areas of debt servicing, over leverage, gas, etc. through these numbers, and I think we should concentrate more on your specific question answer, which I'll be very happy to answer as well.
Thank you so much, Ruhail Saab. I guess we can jump into the Q&A session. I'd request if whoever has a question could just introduce themselves so everyone else would know who the person asking the question is. And while the first person raises their hand, if you could talk about, you said you're working on alternate gas supplies. If you could talk about what those alternate gas supplies are. Who'd like to go first? Jab tak aap mic haath le.
Ji, I think this had come in the newspapers a couple of times as well. That again is going back to that constitutional clause of 158, which says that gas which is produced in a particular province should be used in by that user first. So what the government is contemplating, and we are working with them for various options, is to switch us out of the SNGPL network. Because what has happened I'm sure most of you know, but just to repeat, because of this Article 158, KP and Sindh have taken stay orders from court that because Sindh produces something like 70% of the country's gas and KP produces, I think, 10 or 12%, they have taken stay orders. So the amount of gas load shedding, so to say, in Sindh is maybe around, say, 10%, but on the SNGPL network, which mainly serves the Punjab province, is something like 40%, and in winter the percentage will be even much higher. So the idea would be to switch us out of the SNGPL network into possibly SSGC or possibly some other sources of gas, like some low BTU fields, etc., in a combination, which would reduce the burden on SNGPL, at the same time increase our probability and therefore also comply with the court direction as well. So, as I said, it's a fluid situation. It keeps on changing on a sort of a daily basis, but we are working actively with the GOP in trying to identify, because it has to be worked specifically. Okay, this field so much, this network, and so on and so forth. So we are hoping in the next 2 to 3 months that something concrete would materialize. Now, it wouldn't guarantee 100 MSCFD throughout the year, but it will be substantially better than what we are facing today, basically.
My name is Yusuf Kolia. Just I would like to know, have you taken into consideration the gas development surcharge in your model?
No. Well, the gas development surcharge, if you see the history for the last 10-15 years, any gas price increases are passed on as such. And while, without giving a specific answer, I don't see why it should be an exception this time. But as of right now, that law has, at least the SRO or the notification has not come, and we'll make a final decision at that moment of time. But our model says that that will be a neutral to us.
So, are you planning to go for litigation for this gas development surcharge or not?
No, why should we go for it? It's a properly passed bill, so.
There's no legal complications. This levy is okay.
Okay, just to clarify, if you mean on the new plant, yes, we will not be charged. As we understand the bill, this gas development surcharge will only be applicable for our old plant gas. It will not be applicable on NWEN. The second question is whether, in form of financial numbers, we've assumed it to be neutral. We don't have any plans to challenge it legally, which means it's neutral for us, means a cost pass-through basis. That's our assumption.
No further questions? Zahid, Mr. Zahid Shafi, right there. पहले वहाँ पर फिर इधर.
Yes, my question would be that you said that you may shift to other sources of gas like BTU, low BTU, or you can maybe get some arrangement with SSGC.
Right.
How much time it can take? For example, if you are shifted to SSGC network, how much time it can take?
Yeah, as I said, on the arrangements part, it could take, we are guessing 2 to 3 months before the government gives approvals. But if you're talking about the physical part of it, it depends on, from the SSGC network, it should not take more than 3 to 6 months. But if it is a dedicated field, we have to see what facilities are already available there. So I can't comment on a particular field. But if it is just the SSGC network, maximum 6 months, probably less.
So the minimum possible time, let's say everything goes really smoothly, minimum possible would be 9 months?
No, it's
2 to 3 months for the arrangements and then 6 months for the physical. So
yeah, but I would say 6 months in total would be. But having said that, practically, I mean, I'm volunteering this, but January, February, we're not expecting any gas anyway for at least the NWEN plant. So practically, even if we're on the SNGPL network, we should start getting gas early March. That's obviously our base case anyway.
Okay. One more question. When was the last time, let's say, I think someone told me that, you got your gas in April, I think last, in June, in this 2011.
When did we get gas in early, after the year started? That's what you're asking?
Yeah, I think the last time we got gas for the new plant was in April.
No, it was, I think, March, middle of March or something like that.
But, as now, they are doing more of gas rationing, if you see the CNG station, oil.
Right. The difference is, let me tell you what the difference is. The difference is that at that time, because there was a shortage, initially they did not even recognize our right to get that gas. Okay? So we have now established that at the very minimum, let me tell you from an SNGPL perspective, initially they said, you don't even deserve this gas, right? So we are at a stage where they have already accepted that you are at least equal to the rest, and we are saying we are actually above the rest. So that's now the distinction. So the other plants, as an example, got gas, if I don't know exactly date, I think towards the end of Feb, where they started getting gas, the other plants and the SNGPL network. So I don't see any reason why we should be any different at the very minimum from the other SNGPL plants. So that's why we were saying January, February, no gas, and maybe in the first week of March.
right here.
Yes, sir.
From Wicket. Thank you for the presentation. I was just wondering, you have laid out a plan in which you are suggesting that a shift to the SSGC network would play out relatively better than the situation the company finds itself in right now. From a long-term view, how feasible is that suggestion, considering that this curtailment on the SSGC network? Is there an alternate to the alternate plan that you have put forward right now?
See, there are. Okay, let me first try to clarify, maybe I was not very clear. There are, I would say, 3 levels of what we are working, right? The first level is that we are saying we are just a customer in SNGPL, right? Just like any other customer, we'll get gas at approximately, as I said, we got 37-38% of our quantity for the year. And that is what I have shown in the numbers, that I get the same gas as I got this year, like any other customer. And I would, at the current prices, what the EBITDA would be. That's number one. Second is, I have a High Court order, which I will try my best to implement and get more than that in the SNGPL network itself, right? Saying there's a High Court order to SNGPL, please supply them 100 MSCFD day in and day out as per the contract, which I'm trying to implement. So that's the second level. The third level is where, as an alternate, as a backup, we are trying, we know there's a practical limitation in SNGPL, and then political factors like domestic, etc., will come in, and we know it's not a practical to assume that you will get that 100 gas for years and years, and you know in the situation. And therefore, we switch to an alternate which is acceptable to the government and to us, and which again may not supply us 100%, 100 MSCFD, but significantly better than what we are today. So these are the 3 levels. Now, coming to your question as what will happen in the future, right? Now, yes, we have done an internal study which shows that what SNGPL is facing, SSGC might face in the next, say, 3 years or something like that, right? So we will come a situation where if supplies, assuming supplies don't increase, the demand obviously slowly will increase, etc. And you will reach a situation where you are having such high gas load shedding percentages and SSC as well. Now that's a slightly macro situation, and that can only be mitigated by 2 things, which the government is already working on. One is new discoveries. There are some new discoveries that have been there, which will supplement existing ones, and things like hopefully the zinc blocks might get repeated. And the other one is LNG, right? So we are going to be in a situation where you are in a macro situation of the gas availability on a long-term basis, and that is why our one of our endeavors on this switch is that to get maximum percentage possible, and I'm not committing what will happen with, is on dedicated low BTU gas where nobody else is a claimant on that, and then just like Mari, you can continue supply on that without others fighting for your share of gas. So that's part of our endeavor at our company level, but the broader gas situation can only be solved by more drilling and more, or first of all, exploiting or bringing online the existing known fields, drilling more, and LNG.
Assuming for a second the worst case scenario that it's not even 35% online, the new plant. Let's assume the gas is not provided for the entire year. The court order cannot be implemented and the switching strategy does not work. Where does the price per bag have to be for you to be able to meet all your obligations?
To meet the same EBITDA number which I've shown you, approximately, I've done, it would be about 500 rupees a bag we would have to increase to meet the same EBITDA with zero gas on Engro.
Quick follow-up to Junaid's question. Continuing with the doomsday scenario analysis, is there a tipping point where the company just says the local supply has zero visibility, and now we're going to go and secure our own supplies in terms of importing energy?
Right.
Is there a study that the company has conducted? Is there a strategy of that? Can you share with us, please?
I think it's a bit too preliminary because you see the point is that there are quite a number of intricacies, and I'll explain to you. LNG as a price is going to be at least 3 times more expensive than domestic gas, right? Now, either there are 2 models to this. One model, which in fact we are also part of that, which we have tried to see whether we can get into this business, more of a terminal operator, is that we give it to the IPPs because of the efficiency as well as the dollar per million BTU cost the cost of electricity produced is substantially lower than RFO and for sure diesel, I mean less than RFO. So the current concentration of LNG is based on supplying to IPPs who are now, because of a shortage of gas, using RFO or diesel as such. So that's the primary concentration. Till the government, the Mashal project, which was there previously, was based on a weight averaging formula. So SSGC would import, so let's say they import 20% of their requirement, or even let's say as a country as a whole, if you're producing 4 billion standard cubic feet and you import 1 billion, so you weight average $15 and $5 and sell it at $6.50 or whatever the number is. So that is obviously a much better strategy so that every user gets the same price, right? So practically for us to supply in the domestic market and our competitors paying $5 and we paying $15 doesn't make sense. Then you will simply go to court and say you're being treated unfairly, right? And that's a much stronger constitutional argument than what we are going through right now. Either then the government will have to equalize the price for everyone, and then yes, we will compete on a weight average basis. Okay, we'll say okay, fine, we will import X percent, or the government import X percentage of our gas requirement at 15, and we give domestic at, by that time the price may have risen from the current $5, and then we compete at international prices. That's fine. I mean, but then it should be a level playing field. It can't be that my competitor is getting at 5 and I'm getting at 15, right?
Fine, just last question. I know you keep this one close to your heart, but in terms of understanding the actual efficiency of the
Speak up a little.
plant, can you just give us a rough idea of if you were to get the gas that was allocated to you initially, how much of a better efficiency could your Engro plant be running at right now?
I think we have given those numbers. Our base plant runs at about 27 to 28 million BTU, depending on the level, etc., winter, summer, etc. And we had actually said that our versus the 27.5, our new plant was 15% more efficient if it runs at the full capacity. And most of it is in the fuel component, simply because feed is more of a chemistry. It's a stoichiometric ratio of when you know how much gas and methane you take to produce. So there's small efficiency there as well, but mostly in the fuel component, which is the more expensive component as well. Obviously, because when we don't get 100, then we have to operate at an inefficient level, and that depends on what level. If it's at 90 or 75 or whatever it is, it depends on what level. But that is incorporated into our pricing basis. That okay, if we're getting gas at average, say 77% or 76, the efficiency debit is incorporated into our pricing decisions.
My question is that the last time prices went above 15.80, the government acted very quickly to clamp down on the price hikes. I don't foresee how you can manage to increase prices if your gas supply deteriorates further, and given the gas test coming up, how you plan to pass on the 100% price to the consumers? What's your strategy?
The easy answer, time will tell. But on a serious note, I don't think that's an issue. I'll tell you why. Because our that price increase which we did beyond 1580 was a one-time 400 rupee increase, right? And the idea was to shake the government into some action. And I personally think that it was successful from the perspective of A, we got gas 3 days after or 4 days after that action, and B, they've seriously started this alternate source of gas. Previously there was just talk, and now there is some serious discussions and meetings and specifics being worked out. And both these things happened after this happened as such. So if one was to say, if there is a cess and you need to pass it on, as I said, only we can test it out when time happens. I personally don't think it's an issue.
I think the market perceives that the ability for you to pass on the price is actually hampered there.
I agree. That's what the stock price is saying. But as I said, let the cess come, we'll find out.
How much of the current price, 1580, how much of gas load shedding and how much of shutdown, complete shutdown for the whole year does it incorporate?
That's what I said. It's about, based on what has happened in 2011, which is about 5 months of gas.
91 and 35. 91% utilization on that.
Yeah, and about 37, 38 or something like that. Yeah.
And 5 months complete shutdown.
No, 5 months of gas at 80% or something. So that works out to whatever, 35, 37.
Right in the back over there. Maybe आप बगैर उसके पूछ लीजिए. Without the mic.
Considering the recent volatility in the stock prices in the last 2 or 3 quarters, there's some speculation that there have been some change in the shareholding pattern of the company. Would you like to comment anything on that?
Shareholding pattern?
Yeah, because people are speculating that some foreigners are trying to sell their stake if any.
I haven't looked at the book closure numbers, to be honest, and I wouldn't be able to. But I think, to be honest,
If there has been a substantially abnormal volume in agro prices, that does reflect the gas uncertainties plus the other factors too. So, is there any other
that's more of a technical factor. As I said, that's more of a external to the company factor. So I wouldn't know about it. So honestly, I mean, you can ask me anything about the company operations. I'll be happy to answer. But
Let me ask you, while everyone else is thinking about their question, let me ask you a question, and it's a bad question because it's hindsight driven. And it's very easy for any of us to ask you this question, difficult to be in that position. Did you ever think while the plant was, while you were working on putting up the plant, that this could happen? Or were you sure that nowhere down the road would you have a problem with gas?
I mean, okay, let me try to, if the question is that did we think about the gas issue when we were putting up the plant, yes we did. Just to give you some numbers, in fact we have the, how should I say, the Ministry of Petroleum, in fact we have OGDC numbers on demand supply. There was at least if I remember correctly, 1 billion standard cubic feet that was to be added in the system from indigenous sources from the 2005-06 time frame to now, which has actually been flagged, number one. There has been LNG that was supposed to come in, which hasn't come in. On the demand, so that's on the supply side. So maybe the supply is short by, I don't know, maybe 1.5 billion, which should have been there. On the demand side, two things have happened. Because of the political government, the domestic commercial connections were given a total free hand without looking at demand supply and whether they will be able to fulfill that commitment. And it was literally given a free hand. On top of that, the CNG stations were given a total free hand. The UFGs, unaccounted for gas, which was 3-4% initially, is now at 12%. And most of it, I would say most of it, a good portion of it is coming around the CNG stations. And if someone of you have driven in Punjab, you can see gas being sold at 25-30% lower prices because that's stolen gas. So it is all linked to that. So what is, and we did a rough calculation, the additional new connections equivalent sanctions that were given since we started building our plant is 1.4 billion standard cubic feet of new connections that were given. So if you add the two numbers, supply of about 1.5 billion, I'm giving you rough numbers, but just to give you a feel for it. 1.5 billion of supply didn't come in, and you added 1.4 billion on the demand side. It's just pure bad governance. I mean, yeah, we thought about it, but we didn't realize that A, the demand supply would be that out in terms of our numbers, and B, we counted on the government to fulfill its contractual obligations as they have done for many of our other projects, including the previous expansion we did both on the tax holiday and the gas pricing, on, let's say, the polymer project, on tariff protection, on EVTL in terms of implementation agreement. So we've done a number of projects where we've interacted extensively with the government and they have fulfilled all their commitment. This is probably the first time And again, not that defending them, it is probably because of political pressure. They're not willingly reneging on it. Otherwise, if they wanted to say, they would have said, we won't give you even 70-cent gas, but they are billing us at 70 cents. So it's not that they want to renege, it's just that they badly planned it, they are in a corner, so whichever is more politically expedient to do it, that's how they are managing their gas supply. ऐसे ही कहने जी आवाज आ जाएगी.
First of all, thank you for the presentation. I'll move on to my question, which is, more or less relates to the three levels on which you mentioned that you're taking the gas issue with the government, and secondly, the political environment that you mentioned, which is, actually messing up the entire situation of gas availability. When we look at the allocation of gas in Pakistan, and you rightly pointed out, there is a lot of misallocation. Are you working on, the lines of identifying certain sectors which have a strong claim on, which have a technically or economically strong claim on the available gas, and those sectors which shouldn't get gas and they're still getting it, and partnering with each other to fight the one who shouldn't get gas eventually? Is there any such sort of strategy going on? I'm asking this question because whenever we I'll move on to this as a second question. I'll first like you to answer this.
No, I don't think we should get into the government's domain of trying to advise them on what is right and what is wrong. We should simply fight for our rights. There was a contract, you gave it rightly or wrongly, and you should give us the gas. However, having said that, we also justify giving gas to us on economic grounds as well. Having said that, just for your information, the Planning Commission had commissioned a study which was done by Hagler Bailey in Islamabad on the most optimum use of gas, short run and in the medium term, which is 5 years or whatever. In the short run, the number one allocation was to NWEN. The new plant, because of being efficient and obviously producing the most urea from the, was rated number 1, and all fertilizer was, I think, at number 3, higher than even domestic allocation as well. CNG was right at the bottom because of being consumed. So it was a combination of a quantitative and a qualitative. Quantitative means what is the replacement cost of this gas, and qualitatively whether it's being used for value addition in the economy or just being used for consumption purposes. So it was a combination criteria where our plant came out as a number 1. It is a public study. It's, I think, on the Planning Commission's website. And even in the medium term, it was, I think, at number 3 or number 4, but clearly, very high indeed. So that was an independent study done by the government when, if you are using logical way of allocation gas, but as I said, because of what is happening right now, I think it's more driven by political considerations as to based on ground realities as such.
My second question pertains to the political considerations. Whenever we often hear news stories in the media, we often hear that government plans to cut or reduce supply to the CNG sector. The next day we see a press release of the CNG Association of Pakistan कि जी पाकिस्तान के गरीब मिडिल क्लास आवाम को सीएनजी से महरूम किया जा रहा है, एंड उसके 2-3 दिन बाद we get a statement from the ministries and कि no, we are not doing it. Now this sector probably, as you mentioned, it was on the lowest in the priority that Hagler Bailey came up with, but they seem to be using their political strength very well. They are using the media, they are using the public sentiment. उसके बाद होता भी है कि you watch Geo News और उस पे interviews आ रहे होते हैं लोगों के lined up at the CNG station, that public opinion is made, but we do not see certain similar actions either coming out of the fertilizer sector or even coming out from the power sector, because if you look at the power sector, even the fertilizer sector, the common man gets to bear the most pinch of gas not being available to these two sectors?
सही है, आप बिल्कुल सही कह रहे हैं. I don't think, I mean, both, not only CNG, but even the, let's say, the textile or the general industry has used the same platform of KG strikes or rodo pe nikal hai. I don't think we should be doing that, because I don't think that's the right way of approaching it. We approach it in the way of making presentations to the government as to why this gas should go to this, whether it be contractual or economical or whatever. And by the way, just so that you're clear, ये सब करने के बावजूद we did get gas for 5 months in 2011, right? So what the government has tried to do, whether rightly or wrongly, they've tried to load shed everyone. So you should divide the year into two parts. One is the winter, let's say December, January, February, right? Where at least we don't get gas, wo thoda bahut le lete hain. Abhi to we are talking about shutting down for the entire month and so on and so forth, as you must have said. So winter hata dein for a second. So out of the balanced 9 months, they've practically followed a rotational policy. Pura saal, CNG has been closed on an average of 2 to 3 days a week. Same with industry. हमारा average देखेंगे तो वो भी वही तकरीबन 4 दिन आ जाएगा हमारा versus as compared to that. So basically the government has tried to load shed in a way. अच्छा जी इनको दे दिया थोड़ा इधर दे दिया तो वो you worked out an allocation and that's what they're trying to do. So knowing the importance economically and contractually, they just simply tried to satisfy all parties, and our base case assumed they'll go and do the same in 2012 basically.
Thank you.
मैं समझ रहा था काफी हल्ला गुल्ला होगा आज यहाँ पर, सब काफी खामोश है.
जी.
You mentioned that all the questions predominantly will be on gas. I think all the questions have been regarding gas. I'm going to try to break the trend a bit. Two questions. How do you see this slowdown in the global equity and commodity markets? How will it impact the various businesses in Engro in your mind? What will be the challenges and opportunities? And secondly, you have a new CEO in Engro Foods. If we just highlight some of the predictions or what you have in mind as far as Engro Foods growth trajectory is concerned over the next 12 to 18 months. Thanks.
Right. As far as the commodity prices are concerned, one is obviously an indirect way, which is obviously with if cotton and agri commodity prices start coming down, then the affordability to the farmer of inputs, including fertilizer, could be an issue. Now, that is in a way mitigated because DAP we just trade, so we have control on the amount volume we come in and how much position we take based on prices. So, for example, DAP has also fallen off by $60-70, but we have very minimal stocks left, so that's not hurting us. But urea, even if demand comes off a little bit, although it's quite inelastic as we've seen in the previous years, the domestic production is so low that the buffer will actually be import, so we don't see any impact there as such. In terms of other commodities, power, I don't see any impact because very high dispatch order as such. WOPAC, we don't see any impact. Rice, yes, but again, rice is we are a margin business, so we buy paddy and sell. So you can't get caught for a few months at a bad cycle where you've actually bought paddy high and then rice price collapse. We'll see how that pans out as such. Food, we've tried to concentrate on the B and C segments where it's affordable. Tarang, which is our blockbuster product, is geared towards that as well. Same, we've come out with a new product, Omang, which is again more price point sensitive. So what we're trying to do is that the marketing is geared towards income segments which can afford lower price points. If the commodity prices do come down, because end product price tries to be are normally tricky, they normally don't come down. So hopefully, actually, for the milk, it should be positive because we should be able to produce, maybe import powdered milk at a cheaper price and then actually improve profitability from that perspective because nobody actually brings down retail prices as far as milk product is concerned. So the only business which could get affected because the slowdown is probably the PVC business, because it is dependent on say the pipe industry. So that depends on construction spending, etc. So that could be a small hiccup there. They also dependent on, for example, packaging industry, and so that it is dependent on some level of activity. The good thing is that because with the VCM plant running, the margins are, the integrated margins are pretty good. So one can export and still realize 60-70% of that margin anyway, even if the demand sort of. So at 150,000 tons, we were planning maybe 120, 125 at domestic, and the rest export. So if the demand goes down to maybe 100, 110, you could, cover that up through exports and not make the entire margin, but make 70% of that margin. So from that perspective, we are sort of hedged to that extent. So, but if you look at our main businesses, food, fertilizer, and power, which is giving most of our revenue and our income, that are pretty much hedged against commodity prices coming down or as such. On our new CEO, I think it's a very good addition to the team. He's been with Nestle for the last, I think, 15 years or so. Last assignment was with Nestle in Philippines. We are reaching a stage where we needed different types. We had Sarfraz, who was, mashallah, a very great leader. He took the company to where it is today. Now, obviously, with such a huge top line, to replicate the same percentage will be difficult because of the base effect, but we should see significant growth. But now we are also concentrating on bringing operational efficiencies, because once you achieve the growth, now to protect the bottom line and actually improve the bottom line, you also, in addition to the top line growth, you need operational efficiencies to protect margins and improve margins. And I think he will be a very good addition to bring about that change in the organization. Ji.
You had initially planned 2 IPOs for this year.
Ji.
What's the current status of those 2 IPOs now?
Ji, as far as the fertilizer IPO was concerned, 2 things. One was actually it was supposed to be a bridging arrangement because we had, because of our construction delays, we had a cost overrun in the project, which is not the EPC project part, which was mashallah under control. It was because of the delays and higher interest costs, etc. So now with the good performance, those bridge loans have already been repaid. So the requirement for that cash per se is no longer there. However, the other issue was to list it, and obviously, it's good to list it, get the market price, and there's employee stock options as well, and it's always to have an alternate way of raising capital as well. But the stock price, I mean, you see the price, I mean, what would we get for a fertilizer IPO these days? So we rather hold on and get a better price for that. The other one was power, and in fact, we deliberated that a lot at the board meeting. Unfortunately, I think even that, the market is not pricing it well enough, in the sense that what I understand from the various analyst reports that even like IPPs, mature IPPs like Hubco, etc., are getting 18-20% dollar returns as such. Ours, in a way, is slightly, I won't say superior, but it's because of the higher dispatch order, lower receivable issue, and so on and so forth, and a brand new plant. It's like qualitatively, I think it's in a slightly better position from that perspective. So to sell an asset at 20% dollar IRR when we don't see any opportunities to deploy that cash, because initially there was also driven by some cash consideration which is no longer there. All projects are complete, running mashallah well. So just to sell an asset for the sake of selling an asset didn't make sense. So we've held on till our Engro stock price improves, which we can get a better price, and B, hopefully some macro change as well, which will give the market better PE multiples and better required rate of returns. Better meaning on the lower side, of course. Ji. Ji. EDC, VCM rate, right, okay.
When you convert EDC to VCM, you get about $800 margin.
Right.
According to plan.
Right.
And when you convert VCM to PVC, I think the margin is far lower.
Right.
So, are you planning to export VCM instead of selling?
We have, well, okay, let me put it this way. If you start all the way from ethylene and you go out to PVC, you will capture that middle margin also, right? So as long as that, and that's the reason for the loss, because the VCM plant was not running and you actually had to import expensive VCM and your margins were squeezed. Now that the plant is running, mashallah, well, then we are capturing the entire chain, right? What we are trying to do, and we have done one cargo, is that the VCM plant does have some spare capacity also. So once we stabilize this and try to take it over 100%, then we can try to do that depending on spot opportunity, that import EDC and then export VCM and capture the margin. But now we are actually starting from a grade below and actually manufacturing to a grade higher. So you're already capturing that margin anyway by selling PVC.
So the nameplate capacity is higher than actual?
The 99% is based on the 150,000, right? But because it was a old plant which we had, we think it can go higher as well, more than 150,000 tons. So our first objective is to run it at 150, stabilize it, and then try to see if we can debottleneck it to take it to higher, and then use it for that additional margin which you're talking about.
Well, Saab, everyone is pretty quiet, but I don't know अगर शर्मा रहे हैं सब या थोड़ा डर रहे हैं, but and maybe people are afraid to ask questions because they're so emotionally. Maybe a lot, like if you look at the concentration of questions, very few people have asked us questions. Like for example, someone like Mir Adil Saab or Shahid Zafar Saab in their companies, both the fixed income side, equity side. Really, how I think the concern really is, and obviously nobody has high hopes from the government, because a lot of what we spoke about today has to do with policy, has to do with economic justice from our courts, has to do with finding logical minds with OGRA and Ministry of Petroleum and figuring out a solution. But really, the confidence is in your management, you guys. I mean, if you could speak from your gut, talk about how you. I mean, we're all in it. We're all in it with you. You guys are the captains of the ship, but we're all in it with you. How will you steer us out of this storm?
Well, I think I've tried to explain that we have a three-layer approach, and I sincerely believe, I agree with you that there are serious governance issues, there are serious policy issues, getting implementation is difficult as such. But I sincerely believe that we are working on a number of options, and we are looking really at a doomsday scenario if you think none of them will work, right? And even if none of them work, as you said, you asked that question, what will it take to bring it back to that profit? Now any of the analysts can make that call, okay, well, I don't think they can do 500, maybe they do 200 or 250, and work your model accordingly. I mean, that's all I can say. All I can say is I've personally bought shares, my CEO has personally bought shares, so I'm speaking from the gut now. So.
I've been getting emails on that.
No, that was on selling part. I'm buying shares. Ji.
One more question is, if you do your separate profit and loss for the new plant, you do separate to P&L.
Right.
So, are your sales enough to pay your principal amount? I'm talking to the body.
Right. It depends on how you do the P&L. The issue is that let's take 2010. Okay, we didn't have the new plant; it was being constructed, but gas curtailment had started. We raised the price by 75 rupees. Why? Because we were curtailed 8% or 7% on Enven, right? Suppose we didn't have the new plant, would we have raised the price by 550? No, we wouldn't have, right? If some other plants who had faced more curtailment, maybe they would have raised and we would have had also a benefit, but we wouldn't have raised the prices, right? So the way we do our calculation, we have a very clear number. This is because of curtailment on the old plant, this is on curtailment of the new plant, this is the less percentage we are getting even when we are getting gas, and so on and so forth. So if I do whatever price increases we have done, because of the new plant and I make that P&L, yes, we are positive. We are positive. We would have made money and we add back depreciation. Maybe we wouldn't have serviced, we would have clearly serviced the interest, maybe not 100% of the principal, so we would use part of the base cash flow to service some of the principal of the debt which is there. But yes, it would have been profitable as such.
Next year, जो है 2012 में, what are the different times at which the 10 billion in principal is due?
It's due March, April, and then September, October.
It's almost half. Five.
In fact, just so that we've actually, mashallah, cash flow has been good. We actually, the February installment, हम prepay कर रहे हैं first week January. So that's the level of confidence.
Advertising as well. Bring some confidence.
A question was just asked about delaying or not going through with the IPOs of Engro Fertilizer and Avajet. How should the market read that? Should the market read that as a area of confidence that if you were so strapped for cash that you will push through with the IPOs anyways, realize the money out of it, or do you think it's a sign that the IPOs are not part of the plan, so things are not going as part of the plan? How should we view it? On a positive note or a fixed?
I think I would say it's a combination. I think one signal we're giving is we don't need the cash anymore, which we could have been. Second is the multiples at which the market is trading today. Even if we need the cash, at least I, as a CFO, would try to come up with other alternatives than selling equity that cheap. But yeah, the first signal is we don't need the cash anymore. Mashallah, we're out of the woods. And B, it's a multiple. So if without needing the cash, if the multiples were good, we would have still gone ahead for other strategic reasons. But because both situations are no longer, the market multiples are very low and we don't need the cash, then